Hey, welcome back to the channel. Hey, if you watched my video about my predictions for 2024, Happy New Year, by the way, I'm going to take a deep dive into one of the stocks that I'm talking about, and that is EDU. So let's jump right into EDU. All right, let's start looking at the fundamentals over here because the fundamentals are mixed, actually. This is not a typical stock for me. It's just that it's showing such great technical strengths that it's making me take a look at the fundamentals. And I'm looking a little deeper than I normally would. All right, so let's start over here on the left. And in 2021, they made $2.35, which was a decline from the year before. And then they got hammered in 2022, down $6.17 in earnings per share. But then in this 2023, this past year, $1.51 higher, and then $2.58, and then $3.42 expected next year in 2025. That's pretty good earnings increases. And if you look at the bottom, you can see those are triple-digit earning increases, right? Obviously, it's working off of a lousy year the year before, but things are really starting to look good. Sales is increasing, earnings is increasing, up-down volume ratio, which is a supply and demand level of buying, at least right now, is increasing. And so they're doing a lot of things right. The relative strength is fairly good, and we'll look at the return on equity is lousy. It's 7, right? I don't like that, but there's no debt. And it's also, there's no earnings per share growth, but that's a blended rate over the last 3 years. And you can see over the last 3 years, we had a big loss in there on one of the years. So it doesn't compute that. That's why it normally wouldn't pull up on most screens. However, are they turning things around? I don't know. To me, it looks like they are. Now let's go to the right side of the screen. So you can see this is extended from second stage base. So it's starting to get a little bit late in the run. I will admit that. And it's up about 57% from that consolidated base range. But let's look at a couple of the numbers. So you can see here, it bounced in June of 23 off of the 200-day moving average, and it shot up, right? And it shot from, let's say, 35 or 38 or something like that to about 58. Okay, so it went up about 30 points. Dropped a bit, kind of got rid of some sellers, pretty healthy though, and then it shot up to just a little over 80. So you can see this whole run here, this whole run is basically from 37 to 80. So let's call that, I don't know, 45 points, 45 points. Call it 40 points just for round numbers. Okay, so we got a 40% run here. I believe it's going to come back, and it is coming back to test its 50-day moving average, right? That's what healthy stocks do. They run up and then they test their average, make sure everything's for real. And then that'll probably be around 70. Okay, so it's around 73 right now, up $3 just to today, and today's the 2nd of January after the close. And so you're seeing that it actually has started a test of the 50-day moving average of the $70 level. Now, that gives it the right, okay? I mean, it could go obviously down and test the $200 level, but that's a pretty long way down. It's got to go down to 52. And this is a pretty healthy stock. So I think what's probably going to happen sometime this year is that this thing is going to run that 30, 35 points up to what I think is going to be about 105. So you're looking at a stock that's around $70 running up to about 105. That's my prediction for EDU for the year of 2024. Bottom line, though, is if you don't have a strategy that's a breakout strategy, because a serious breakout strategy here would be to buy an initial position around the 70s. But then when it gets to about 81, 82, that last high that it had, that's where it really takes off. And so if it can get some volume going into that 81, 82 level, now you're going to start to see a lot of buying, taking that up to that extended level of 105. But what we do is we don't just buy a stock and hope, right? Because we're going to be wrong a lot of the time. So what we do is we buy a stock and we sell calls against it. And when you sell options against the stock, you do covered calls, then what you're doing is you're bringing income in and reducing your risk while you wait, because you're reducing your position because of the income. You're reducing your basis. And so the cheaper the stock gets, the more ROI that you have when it does go up finally. So that's what our strategy always is in any of these stocks is we're not always right. We don't know if the stock's going right up or down. Last year, I was 7 out of 10 on my predictions, and I'm not in the prediction game. I always say that. I'm in the probability game. So the probability is the stock is going to go higher, but the prediction is 105. But if I'm being really truthful, I'm going to say the stock could go up and its stock could go down. That's my real prediction, but I have no idea. So I just play the probabilities. All right, see you on the next one.